Alright, what's going on, Premium? Today I'm going to talk about the importance of respecting levels. Now, what do I mean by that? Let's go into today's trade. It is, what is it, fucking January 14th? Why am I in replay mode? For today's trade, as you guys know, I took a long and I won. And you may be like, well, how was that possible? Let's see what happened today. How could you have taken a long and won? Well, fuck you. I'm about to show you. So right over here, we had this low. It was the daily low coming into open. And then we also had this gap from London that had this protected low, this low inside of a gap right here, which is always good confirmation. And what did we do at open? We came down and we swept both lows and we made a SMT with the lower low. But here's the important part. This is a 30-second, and I want to ask you, why do you think I took this trade? Not like the close was dog shit. It was very close to open. Now, excluding the fact that we have data highs right here as a great target and a great TP1 spot, which, by the way, I took both, so, you know. The reason why trades like these work is because, let's go from a higher time frame perspective. I know we got fucked for the rest of the session, like we kept on bleeding, but we came down, we interacted with these higher time frame gaps, and then we immediately V-shaped. And the reason, whenever you see a V-shape, you know, okay, momentum is on your side. Because what happened? We attracted to the pool, the liquidity pool right here. We came down, we grabbed those orders, and then we immediately reacted. So not only is that giving us our higher time frame confirmation that, you know, we reacted to the liquidity pool, we're making a wick, so now we're coming back up. We also have our IFVG that is a huge, huge point of emphasis to show that momentum is happening. Because what is an IFVG showing? It's showing that we are disrespecting bearish price action or bearish imbalances. This is a bearish imbalance. If we were truly bearish, we would displace through these lows, respect this, and then continue to displace. But because we didn't respect this, I know that we had to, even if we weren't bullish for the entire session, we had to come up and at least take some highs, maybe take this draw on liquidity before we wanted to sell off. And I was bearish for the day. But like I said, we could get a pump at open, we could get something pretty nice. Also, a huge thing. Would I have taken this IFVG if the gap were instead like down here and this was the close? Like this, for example. Or actually, should I even say, would I take the IFVG if the gap was like right here on the 15 second and we close like right here? And then I put my stop below the low of the move and then I targeted whatever. Maybe I went for like a 1-to-1, etc. Why would I not take this? I would not take this because we haven't come back up above the levels that we swept. If you're taking an inverse, it has to come up above the level that you swept, or the fair value gap that you respected, shit like that. For example, like, let's go on my trading journal, right? Let's see. You see this amazing trade that we took today. Why did we take it? Because we bounced out of this higher time frame gap. What happened with the inverse? We're inversing out of the gap. We didn't inverse right here inside the gap. We inversed back outside of the gap, showing momentum, showing order flow flipping to bullish. Right here, my trade yesterday that lost. We had this 1 hour unfilled gap that we came in, V-shape, respected, and closed back up outside of it. We didn't enter here because we were still in it. We entered up here because we inversed outside of the gap. Great trade. Just because it loses does not mean it's a bad trade. And then today, no different. We swept the level. We came back above it after forming an external SMT, and that is showing momentum is on our side. So you never want to take the trade when you're still here, because think about it from a higher time frame perspective. If you take the trade right here, then think about what the candle looks like on the 15-minute. The candle is still below the low. So for all we know on the higher time frame, we're displacing lower and lower. We have momentum to the downside. Sells are looking sharp. We're shifting structure. You know, we haven't swept the low yet. So the only way we've swept the low is if we can then come back above the gaps like this and absolutely moon like we did right here. And that's why I got in on the inverse, put my stop here, and then I took partials here, and then what would this be, a 1-to-1? I don't even know if 1-to-1 got hit. Oh, it did. Nice. Okay, fuck yeah. And then your boy top ticks because he's the best in the game. But the thing is, a lot of people don't understand. I met with a hedge fund manager who told me about how he trades and what they look for every single day. And you want to know what they look for? And I'm not even kidding. Correlation, momentum, and volume. So let's talk about that. Momentum, correlation, and volume. Let's go with correlation first. Was there or discorrelate, whatever the fucking word is, uncorrelation? Would that be right? I'm not sure. There was no correlation between ES and NQ on this 15-minute. NQ is taking out lows that ES isn't, showing there's no correlation between these assets right now, and we need to reverse. We need to have a major move at some point in order to, by the way, let me add the volume indicator just for this. In order to, there it is, volume. Okay, in order to, in order to get our assets back to moving together. So, boom, correlation. We don't have correlation, so a reversal could be incoming. Now let's talk about volume. Each bar represents volume. What is this candle different from than the ones before it that took out the liquidity? Well, when we came and took out these levels, we were pretty weak on volume. But then this candle right here has incredible volume, fucks over these, and also matches the volume of the candle that came down to this level. So we have volume. There's no doubt about it that there is orders being filled. We took orders here, and now they're being filled. So we have volume. And then momentum, the IFEG is, I just want to make sure, like, my dick is not, like, because I keep going like this to fix my fucking strings on my pants. Alright, I just want to make sure I wasn't, like, look like I was playing with my dick on fucking video. But the momentum is why I use the IFEGs and why I use internal SMTs. Because momentum is shown when we are inversing the opposite order flow. That shows that there's momentum to that upside. That 3-step process is going to get you so many dubs, and that's why coming above the level is going to show those 3 things. In what way? If we're coming above the level, then we have good volume because we're taking orders from below the level and coming back above it. We have good momentum because we're inversing bearish gaps in this example. It could always go either way. And then we have uncorrelation because this level was taken out by one asset and wasn't in the other, and that's why I'll also usually look for, if we form more structure typically, an internal SMT for an entry as well, because that'll show immediate correlation mismatch. All right, if it's on the higher time frame, then yes, we should reverse at some point, but it's internal. That means that the reversal is going to happen right now. So those 3 big parts are how you can catch very nice quick moves, and why my day was done in a fucking minute and a half today, and why me and, however many people were in the premium today were done with a 5-minute workday. So that is the truth. That is the biggest thing around it. I learned from a hedge fund master himself that momentum, correlation, and volume drive the market and drive trading. And if you want to get a W, you need to make sure that those are confirmed on your entry. If I took this inverse down here below the level, okay, we wouldn't be correlated. You got me there. But there wouldn't be a reaction to the low yet, meaning ES could still be going down to take that low, and then all of a sudden your correlation is gone. There's no confirmation of them being uncorrelated. They just happen to be right now. You need to see both react off of it so you know, okay, one took the low and one didn't. If you're still at the low, then the other could still be trying to come and take it out, if that makes sense. Volume, obviously, everybody knows what volume is. If orders are taken, volume is going to increase. We took orders below this low, volume increase. That's why you get this big-ass candle. And when you get this big-ass candle in your direction, it's usually a good time to enter because it means momentum is on your side. And how do you know momentum's on your side? You use your entry criteria. Everybody who enters on ICT is going to enter, with momentum. Let's think about it. Let's say you enter off fair value gap respects. That would be you're respecting bullish order flow that has formed because you're making momentum towards your draws. If you're entering on IFEGs, you're getting momentum by taking out bearish order flow in this example and going straight up. If you're entering off of Fibonacci retracement even, you're going and you're reacting to that level and then flipping and getting momentum to the opposite side because if you're levels trading, you're interacting with grabbing liquidity from that point and then showing volume and momentum to flip to continue going. It's a continuation model setup. So yeah, why did I take this trade? Because there were draws above and because we got those three things. We didn't have correlation. We had great volume after taking out levels. We're displacing. We're getting momentum back above the level, which is so key. Do not take your fucking inverses below the level, dickhead. And then you bank like me every single fucking day. And then I believe there was like a 5-minute or 15-minute something like that. Let's remove these drawings. I literally got off. I haven't looked at shit since 9:35. So yeah, there was this 15-minute that opened up that I believe I saw like 3 guys take. I've been trying to get off trading Instagram, to be honest with you guys. It's not really that fun to be on. And fucking spit on my phone. Everybody kill me. So I think I saw someone take this long. Or this short, I mean. Yo, I'm bugging today. Yeah, with this internal SMT. And then maybe it was like a 1-minute gap or some shit. Let me see. Yeah, this 1-minute gap. Inversion. Stop above the high. Take it to like the next unfilled 1-minute gap. Some shit like that. Boom. Okay, so this hits. You low-key get absolutely stop rated like a bitch. But as you can see, I mean, this fucking price action sucks. Wow, I'd be so heated if I took this. Oh my goodness. But yeah, and I mean, this would be the long to take or the short to take. I'm surprised someone didn't get stopped down. Maybe they put it like here or some shit. I don't know. But yeah, this is an example of all three. Once again, what are we getting? We're getting, okay, no correlation. We're grabbing orders. Let's see what the volume chart looks like. I'm going to take off the ICT kill zone so it's a little bit easier to see. Going to go to replay mode. So what happens? We get extreme volume to the upside to grab these orders. Volume slows down right here with these candles. Volume slows down. Why? Because now we're reacting. We're grabbing the orders. And then it booms back up again because we are now reacting to it and we're fulfilling those orders. And then once we start actually displacing, what do you know? We start getting bigger candles, bigger candles, bigger candles like this because we are now slowly starting to fulfill those orders. As I said, price action was kind of shit today, but that's another trade that people took that I guess did well. So yeah, that would be my 3-step process, or the 3-way step to look at it to eliminate so many losses, because so many people take losses because they're focused on, okay, it inversed. That means we're going to go up, right? Well, where did it inverse? Are we inversing in the middle of fucking nowhere? Or are we inversing without respecting on the higher time frame? Or are we getting that displacement? Are we getting momentum? Are we taking out orders? Are we increasing our volume? Shit like that is going to get you bread. All right, catch you guys later.